Welcome to this segment of GTM Training Shorts, presented by GTM Training Institute, your source for comprehensive income tax compliance and tax provision learning and development. My name is Frank Nieves, Director and Practice Leader. Corporate tax can be complex, and understanding its terms and concepts can be challenging. GTM Training Shorts aims to simplify complex content into concise and comprehensible segments. In this short, we will address the question, what is an uncertain tax position? Listen to Mike DiBianca, Managing Director, as he explains.
So we'll cover an overview of uncertain tax positions, or UTPs. And you might also hear uncertain tax benefits, or UTBs, as well. They are synonymous terms and used interchangeably. So in case you hear either term, you can use both in either context. So what we'll do is we'll cover tax positions. It's not a defined term, but it helps give an idea of what tax positions are and what's meant by an income tax position. And then what do we mean by uncertain? So uncertain is a term that's defined because if other people could think of the term uncertain, it could mean a couple different things to different people. So in a lot of respects within tax accounting space, we need some guidance to explain what certain terms might mean. So we'll explain what uncertain is. And then why do we care? Why do we care about this position? Why it may or may not be uncertain? So if we start with what is a tax position, we gave some examples here, but one example might be a decision not to file a tax return. So in certain jurisdictions, it may not be clear if a company is required to file a tax return in that respective jurisdiction. That might be a tax position that the company takes. So based on that, you might say, well, is this position uncertain or not? And that's defined in ASC 740 as a position that is 50% or less likely to be sustained based on its technical merits and tax authorities' practices and precedents. So if that's the case, it's going to be deemed uncertain under the guidance. If we take an example of you're 100% certain that you don't need to file a tax return, that's obviously not going to be an uncertain tax position. And then that gets into what the result is and why do we care. So why do we care? A tax benefit from an uncertain tax position can only be recognized on financial statements if it is more likely than not to be sustained. So if a tax position is 50% or less likely, that means there might be a liability or some offsetting impact that would be in your financial statements that could affect your financial statements, either your income statement or balance sheet, which is why we care on what the position is and if it's uncertain.
For more information on accounting for UTPs, check out our corporate tax provision ASC 740 programs, scan the QR code, or email me for additional information or to suggest a future topic. Don't forget to like and subscribe below. Thank you.